Hello, everyone. I'm Matt Clark, research analyst for moneyandmarkets.com and host of the Bull and the Bear podcast here with your latest marijuana market update. Remember, you can find the marijuana market update on our YouTube channel. Just go to youtube.com and search Money and Markets. You'll see previous updates as well as other things we produce, including the Bull and the Bear podcast, our week ahead. We've got a ton of stuff going on there. So make sure you click subscribe if you're not already and get alerted to every time that we post up a new video. You can do that very simply. Just click on the subscribe button right down there. You can listen to the Bull and the Bear podcast, which we produce once or twice a week. You can go to Apple Podcasts, Google Podcasts, iHeartRadio, Spotify. Any number of podcast indicators are out there that have us, and you can follow us that way. Get alerted every time that we put out a new podcast. You can listen to it however you see fit. We try to make sure we have a couple different avenues out there. Also, make sure to leave us a comment, a review on any of those platforms. We'd love to hear your feedback. If you have comments or maybe you'd like us to discuss a particular stock, either for the marijuana market update or the Bull and the Bear, make sure you email us. That email address is feedback@moneyandmarkets.com. I love feedback, and it would be great to hear from each and every one of you. You guys have done a great job so far of letting me know kind of what you want to hear, what you want to talk about, and I love that. So keep that coming in. It's feedback@moneyandmarkets.com. Today, I'm going to break down earnings of two of some of the largest cannabis companies in the world that just reported this week. But first, I want to address some of that feedback that I talked about that we've received lately. Since our marijuana market update last week, we've received a lot of it, whether it's through comments on our YouTube channel or emailing us. Either way, I absolutely love to see that. A lot of you out there are wanting to know, what the take is on particular stocks, particular market trends, things like that. There's a lot of it. So just bear in mind that it's not that I don't see it or that I ignore it. It's just I can only kind of address so much of it. In so long. So what I want, but keep it coming. By all means, keep that coming. Love the feedback. Love to hear from you. Again, you've tossed out a lot of companies for us to look at. Some, I'll be honest with you, it's a little harder to get information on because they are very small and it is very difficult to do some real adequate research. What I like to do is I like to, pull together, kind of get an all-encompassing look of a company before I say, okay, this is good or this is bad, and here's why. I really can't do that unless I have an adequate amount of research. And with some of the companies in the cannabis field, that's a little difficult to do just because, like I said, they're very small. They don't have a lot of data. They're very new. It's kind of hard to make that kind of comparison. So in order for me to give you a complete picture of a particular company, I like to kind of look at those companies that are a little bit more established. It's not that the new companies are bad or anything like that. It's just that it's a lot harder to get information from them. But we certainly try, and we'll keep plugging away and get to your recommendations as often as we possibly can. Today, I'm going to focus on Benjamin and Mike, one via email and one via our YouTube channel, asked if we could look at Curaleaf Holdings. It's an over-the-counter stock. And its ticker symbol is CURLF. CURLF. And it's not a problem. Love to. Did some research on this the other day, and more than happy to. What I'll start off with is a little bit of background on what Curaleaf is, what they do, and then we'll get into more of the technicals related to the company. Curaleaf Holdings is a Massachusetts-based cannabis company. It owns and operates about 88 dispensaries, 22 cultivation sites, and 30 processing sites. It's got a market cap of about $4.5 billion, which makes it a relatively large cannabis company by market cap. The states they focus their operations on are Arizona, Florida, Illinois, Massachusetts, New Jersey, New York, and Pennsylvania. These are all states that have something in common. They have a lot of people, and they issue very limited cannabis licensing. So it's not kind of a free-for-all. States usually try to regulate how many licenses they distribute, and these are all states that have a very large population and have very limited licensing. So it makes the market a little bit bigger for companies that are fortunate enough to get licenses to operate dispensaries and to sell either medical or recreational use cannabis in these states. In the last few weeks, they've had a pretty active end of July. And they expanded their offerings into Florida with their Select brand and some of their sublingual tablets. They are first to the market with that, so that's pretty encouraging that they're able to make that offering on the medical side here in Florida. They just, and this is kind of the big thing here, and this is going to be a focus point. They just recently completed the acquisition of Grassroots. This is another cannabis company, and what it did is it expanded the company's footprint. It expanded Curaleaf's presence in Pennsylvania specifically, as well as gave the company some entry into Illinois, Vermont, Missouri, Arkansas, and North Dakota. And this is very important. I'll get to that here in a second. Curaleaf did have a very, very good first quarter. They reported a 28% increase in revenue from the last quarter, and that gave them a 43% margin on cannabis sales, which is really pretty good, considering the cannabis market and the expense it is to cultivate compared to what a company makes when they sell the product. The company's projecting around $120 million in managed revenues for the second quarter. They don't report until August 17th. If they do hit that mark, we're looking at about a 14% increase quarter over quarter in managed revenues, which is not necessarily aggressive, but a good solid number to project at. You have to remember, a lot of cannabis companies, as well as a lot of companies in the broader stock market, have refused basically to give out projections for the second and the third quarter just because of coronavirus. They don't really know. They don't really want to say we're going to do this. We think we're going to do this because there's just so much uncertainty. Curaleaf is projecting a 14% increase. And I think that's possible for Curaleaf. I really do. And I think they can even exceed it, especially if you factor in the acquisition of Green Roots and what that did to the pro forma company to expand its presence in all these other markets. So I certainly think it's a possibility that Curaleaf could reach that $120 million in managed revenue for the second quarter. Now, if I use Money Market's chief investment strategist Adam O'Dell's proprietary stock rating system, Curaleaf rates a 6 overall. Remember, this is a system that is 0 to 100, 100 being the best, 0 being the worst, in terms of six factors. And you have to, we put all this together, we crunch the numbers, we do a lot of analytics with this, and then we kick out a rating. And it's a tried and true system. It actually really works. But by rating a 6, what that says is that Curaleaf is only better than about 6% of all the other stocks in the market. And that is, you have to kind of take that with a little bit of context. With the nature of cannabis stocks and how they are with volatility and size and growth and all these other factors, just about every cannabis company is going to rate low compared to the rest of the market. When you're comparing against companies like Amazon or things like that, it's very difficult for a cannabis company to rate very high. In fact, I think the highest rated stock is about a 70, give or take. And this is comparing it against the other about 5,000 stocks that we rank that have a certain market cap. But all that aside, I think you have to take that and then add in some other things when you start talking about your analysis of a particular company. While Curaleaf may rate a 6 overall, if we dig a little deeper into that, Curaleaf does rate high in size. It rates a 50. And this means that it's a good mid-sized company. It's not too big, and it's not too small. And what that indicates is that it does have a good potential of bringing solid returns to investors. It also ranks a 30 in growth, which means it's 30% better than it's better than 30% of the rest of the market, which means it does have some potential for growth. Not a lot, but it's a cannabis stock. So again, take all that with a grain of salt. Take all that, you have to kind of factor it all together. Take it just based on the ranking system is fine, but I think with cannabis stocks, you have to add in a little bit different analysis with that. Its growth rating is based on its sales, which has been very strong. They've got an annual growth rate of about 218%, which is pretty impressive for cannabis stocks, for a cannabis company. But I think you have to consider the Grassroots merger is probably a large part to do with that. Its return on investments, its return on equity, its return on assets are negative. But again, all cannabis stocks have negative return-ons. The thing you have to look at is how does Curaleaf compare to the rest of the cannabis industry? And right now, while they're negative, they're not nearly as negative as the rest of the industry average. So, for example, its return-ons are hovering between 7 and 15% to the negative. Industry average is double that, if not even larger than that, depending on which return on you're looking at. So it's not good, but it's not nearly as bad as the rest of the cannabis industry. Right now, stock-wise, it hit a low of about 264 back in March, as did every other stock in the market. The stock has rallied about 220% in 4 months, and it's currently pricing at a little over $8.60 a share. Analysts have a mean price target on Curaleaf of 1063. So if you take all the analysts suggestions and you take the high, you take the low, you get the mean. That middle part is about 1063. If it hits that, investors could see about a 23% gain if they buy at its current share price of just under $9. If you're a little more bullish on Curaleaf, you might look at that high end of $16. That would be a 96% increase in return on your investment. In all, I'm bullish long-term on Curaleaf, but not that bullish. I can see Curaleaf reaching $10 a share if this August 17th quarterly report is favorable, and I think it will be. It could test $11, but I think it would consolidate after that. So I think $10 is probably a good price target for Curaleaf right now, just because there's still a lot of uncertainty in the cannabis market. We all know the issues that the industry faces in terms of legalization, in terms of interstate trade, in terms of having large money put into it by larger corporations. These are all headwinds that cannabis companies have been facing for a while. But Curaleaf has done a very good job of managing its assets. They've done a very good job with its expansion. And that expansion has come at very little cost outside of acquisition by buying Grassroots, which is good. So I think that makes Curaleaf an investment to look at. I think it makes it a look at for a long-term hold. And I think, buying it right now is probably a good idea if you were so inclined to do that. Because I think I can see it go up. I can see it go up to about a 23% gain for you, maybe a little bit more than that. Like I said, I think it hits an $11 ceiling or around that mark, and I think it'll consolidate after that. And tick down. So I think if you're going to buy, and I think this is probably common for just about any cannabis stock, if you're going to buy it, it's probably more of a long-term hold because there's still a lot of things that need to play out in terms of the politics of it, referring to the legalization and things like that. So I would be bullish on Curaleaf. I think it's a good company. I think they've got managed growth. I think their entrance into new markets is great for them. And I think there's a lot of potential for it. Just again, do your homework. I've done a little bit of it for you. Dig a little bit deeper if you so choose, and if you want to go ahead and pull the trigger, I think now would be a good time before it starts to tick up and starts to rapidly increase and decrease the potential for those gains for you. The next thing I want to talk about, and I'll talk about this real briefly, is two of the larger cannabis companies reported quarterly earnings this week. One ended very well. The other, not so much. So we'll talk about that. Canopy Growth Corporation, it trades on the New York Stock Exchange under CGC. They released their quarterly earnings on Monday before the market opened. There were losses, which is natural. That's been kind of a standard bearer for over the last several quarters for cannabis companies. But the losses were not nearly what Wall Street expected, and that's good news. The company reported a net loss of 22 cents a share on $82.5 million in revenue. The one thing to take note is at this same time last year, Canopy Growth lost 40 cents a share, and that was when Canopy was in better position in the Canadian and U.S. cannabis markets. So they've actually done better with a worse position. Now, the company's gone through some tough times to get to that point. They slashed about 18% of their workforce. They've refocused their marketing efforts on higher return products. But that's been a good thing, because what they've done is they've stopped burning through so much cash. And the market has responded by ticking Canopy Growth up about 8%. For the year, however, Canopy Growth stock is still down about 21%. It's encouraging that sales are up. Canopy could be on the road to hitting that ever elusive quarterly profit soon. But I just don't know how soon that happens. Sales are good in the cannabis industry. They're very good. But until cannabis companies learn to bring down their costs to make those margins larger, they're not going to turn profit. The other major cannabis player that reported earnings was Tilray Incorporated. This trades on the NASDAQ under TLRY. I know there's been several of you who've asked my thoughts on Tilray. I'll get to that probably in a future video, but for now, I just want to kind of focus on earnings. Tilray did something that was unheard of in the cannabis market in the first quarter. They actually forecast positive earnings before interest, taxes, depreciation, and amortization. That was aggressive. Especially considering the state of the economy amid the coronavirus. And it didn't end well for Tilray. The company posted a net loss of $81.7 million, or roughly 65 cents a share. That was double what Wall Street analysts expected them to have. Wall Street anticipated about a 32-cent per share loss. They reported a 65-cent per share loss. A bulk of the losses were due to inventory adjustments, changes in their viability value. And it was helped a little bit because foreign exchange gains did help Tilray because the Canadian dollar has been a little bit stronger of late compared to the US dollar. So that has helped, but not nearly as much as it should have. Company sales fell about $4 million short of estimates. CEO Brendan Kennedy did say that they've increased their revenue on a year-over-year basis, and they're not burning through cash nearly as much as before, and that's great. But now the company has to focus a little bit more on, they have to drill down a little bit more on what they're going to focus on. I think they're going to focus more on their international medical cannabis sales. That has actually outpaced their Canadian sales for the first time. So I think you're going to see Tilray start to look a little deeper into Europe and maybe focus their marketing efforts, focus their sales efforts on the international market to try to expand those sales a little bit more to offset the losses they have. I don't think this is necessarily a make or break for Tilray, as some analysts have suggested. I think this is just a down quarter for them. I think they will rebound. How soon they rebound is going to be a different story. I don't know that it's going to be in the third quarter, as long as we see things persist in terms of cost increases for cultivation and things like that. It's not going to be the third quarter. I think we could be looking at a fourth quarter rebound for Tilray. So I think that's kind of where it's at right now. Tilray shares are trending down, obviously, with such a poor quarterly report. What that means for the long run, it's hard to say. Again, cannabis is very speculative at this point. It's very volatile. You say one thing one day, and a news headline just changes something just like that. So, it's going to be down for now. It's going to be down for a bit. Is it worth buying in a dip? I think if you want to be bullish on Tilray, I think it would be. If you want to kind of, tread lightly, I don't know that Tilray's buy now is the best time, because I don't know if the worst times are behind them in terms of this quarterly report and things of that nature. So that's kind of my take on looking at Tilray on Canopy Growth. Again, very good earnings report. The losses were there, but they weren't nearly as bad. They're starting to reduce the amount of cash they burn through. That's great. Took a good look at Curaleaf. I think Curaleaf is a positive company to look at, certainly if you're interested in making that kind of a buy. It doesn't rate high in terms of the overall stock market, but as far as cannabis stocks are concerned, I think there's a lot of promise there. So that's going to about wrap it up for me. Again, if you want to leave a comment, if you want a particular stock you'd like me to review, make sure you leave us a comment underneath on our YouTube page, or you can email feedback@moneyandmarkets.com. We'd love to get to it. Love to try to address that as much as we possibly can. Again, just bear in mind, it's not that I ignore or anything like that. It's just I just can't get to them all at the same time. So I try to do one at a time so I can do a little bit deeper analysis to provide a little more insight, as opposed to trying to rate 5 of them all at one time. That will be a very long podcast and will be very difficult to do. So I want to make sure that I provide the most detailed information that I can for a particular stock. So by all means, feedback@moneymarkets.com. Click on subscribe on our YouTube channel. Make sure you get updated every time we release a video. The Bull and the Bear podcast, it comes out usually twice a week. So you can check us out there. We do a week ahead where we look at the Wall Street, what to look for the following week on Wall Street. So that's also something that we do. Plus, we've got a lot of other things in the works. So would love to have you be a part of that. And also check us out on moneymarkets.com. We're posting new stuff every day. Things that hopefully provide smart and profitable investment information to you to help you make the best decisions for what to do with your money. So until next time, this has been your latest marijuana market update. I'm Matt Clark, research analyst for moneyandmarkets.com, as well as your host for the Bull and the Bear. And until next time, safe trading, everybody.